Hey, it's John Simcoe here with Lion Properties. Now, we're here today to be able to ask Rob Chalk, the owner of Altitude Accounting, some questions specifically related to how you should set up your business for doing rent-to-own deals. Hey, Rob, how are you doing today?
How's it going, John?
Pretty good. I was just wondering, Rob, should someone who's new to making rent-to-own deals, should they incorporate, or would a sole proprietorship be a little bit better? What are your thoughts on that?
Well, it's a very complex question because it really comes down to the goal of the person that's starting into this business. Because maybe somebody who's starting to have their first rent to own would go for a sole proprietorship. But if he has maybe dreams and intentions of having 4 or 5, it may be the right time to go into an incorporation. He should really go in and sit down and have a real good conversation with his accountant before he makes the final decision which way to go.
Okay, thank you, Rob. What tools would be considered a write-off for someone who's doing a rent-to-own business?
I always heard from a old accounting friend of mine one time. He always said, any expense, outlay expense, for the purpose of making income. So pretty well any tool that you will do work on that property with is a complete write-off.
Okay.
Now, if it was a very large tool, you may have to write it off over a few years, but if it's only just small hand tools and all that, for the most part, everything's a write-off for new properties.
Okay, what about things like, a rent-to-own operator's website?
Yep.
There'll be vehicle expenses, there'll be a little bit of driving around involved, stuff like that. All considered write-offs?
All considered write-offs, and he would just keep records of his vehicle to show where he's going. That is all to do with the rental itself or the property in question.
So the next question we have is, should a rent-to-own operator depreciate the house that they're buying to do a rent-to-own deal with? Now, most of these deals are 2 or 3 years long, so they are going to be, the house is going to be sold in a relatively short time frame, real estate-wise.
That can be answered 2 ways. I've had real estate of my own, and to me it's, if I depreciate it today, I can take that tax dollars now and spend it today. But when I go to sell it in 3 years from now, I don't have the same write-off then. So it depends on when you want it. For me personally, I wouldn't do it, but it's up to the individual. They may want to take those write-offs each year and use that money each year. Me, I'd rather get it all at the end of 3 years.
Yeah, I do mine the same way. I don't bother depreciating the home, but it's always a question that everyone's always asking.
Yeah,
right?
but it depends on how long you want to keep it. If it's a 10-year-old, but these type of rent-to-owns are, like you said, 3 years, 2 to 3 years. So it really doesn't work for that, in my opinion. But that's my opinion.
Thank you, Rob.
No worries.
Another question that has been coming through is, what sort of forms should someone who's putting a rent-to-own deal together provide to their accountant when it comes time for the accountant to prepare their tax return?
To me, this is one of the most important things because a lot of people have a hard time keeping good records. It's best, if it's not a good skill set of yours, to give every single thing you have or get to the accountant. Whether you think it's relevant or not, give everything to the accountant because at least they'll store it for you and they'll look through it and say, hey, you can use this or you can't. Because I've seen a lot of times that people don't give you all the information and they don't get all to take the advantage of all the write-offs they could have used because they don't understand it. Every single shred of paper you have for that deal, you should bring in.
Awesome. The next question is, Rob, what kind of computer programs should the deal maker be using to help them out with some of their bookkeeping that they'll be able to submit a file to make the accountant's job a little easier when it comes time to crunching the numbers?
And not only make the accountant's job easier, save them money. Because if their software works with their accountant software or our software, it just makes the transition so much quicker. The biggest ones we see in the market today is either Sage or QuickBooks. And if you're not very familiar or the new user, QuickBooks is usually the one that most people use because it's the most user-friendly. And we see that all the time. And you literally got to put your stick in, take your information off, bring it into us, we stick it in, goes in with our software, and just integrates, fills the sheets. And it saves you a lot of time and money.
Yeah, definitely. I'd say, reducing some of those bookkeeper costs are definitely going to go a long way to making more profits as a deal maker.
Yeah.
Thanks a lot for that answer, Rob.
And for us, to me, we like working with our clients to educate them because I'd rather see them do a lot of their bookkeeping, which saves them money and it helps them grow their business. saving money for anybody's company is a good thing. And I like to help our clients do that. That's why we teach them how to do their own bookkeeping.
That's why I like to do business with you too, Rob. I use Altitude Accounting myself, and I do recommend using Altitude Accounting. Even if you're not in the St. Albert, Edmonton, Alberta area, you guys can always get on a Skype call and still talk things over, and they'll give you all the answers that you need. And last question, Rob, where can people go to be able to get in touch with you?
Well, they can go to our website, altitudeaccounting.com, and send us an email, or they can give us a call. And the big thing about it is, even if you decide to use your own accountant or whoever you decide to use, for me personally, I've had rent-a-owns, I've had apartment units, and I've done a lot of real estate. And what I find is a lot of people like to deal with people that have already done it. So the big thing is, if you're trying to get an accountant in your area even, I would suggest you ask your accountant, has he ever done a rent-to-own deal? Does he have his own rental properties? Has he ever done it before? Because even though he may know some of the rules of it, he hasn't done it before, he may not know the intricacies of it that we know. So if we can help you out, please give us a call, or is any way at all, and make sure you tell us John sent you.
So there you have it. We were able to answer everyone's questions from the comments, and this make sure that whatever you do when you're putting your rent-to-own deals together, that you discuss things with your accountant so that you can maximize your returns and ultimately get the greatest return on investment for yourself as a business owner and your deal makers and money partners.